if that's. I want to verify everything's working, and then we'll get into a whole lot of talking. I'm going to try and keep it down to under an hour today, as usual, but I got a lot to go over, and it has been just a crazy trading week, and I've loved every second of it, by the way. I won't complain. No one would listen anyway. So, looking at SPY, everybody was a little bit greedy this morning, and I can tell you what, usually when that greed falls exactly into a known liquidity zone, uh, usually it tends to return to center or return to sender or return to the base. And I'm going to show you how I found this particular level in just a moment here. Let me pull that back into a daily chart and you'll see what I mean. So effectively, ooh, God. You go and you look left on a daily chart and you find key levels. And I found that this peak back here from August of last year, you have a big wick sticking out of the top of that trend. And that is a known liquidity zone or a known supply zone for where sellers will be waiting. Also, I noted very quickly a liquidity zone for a demand zone is just below this doji, and it's right on that wick within that doji. Look left on a daily chart, you'll find those pretty readily. Some of you might have noticed that I'm starting to use TradingView as display instead of Webull. I've kind of run into some drawing issues on Webull, so I'm working with TradingView now, and I'll flip back and forth still. But one way or another, I still have a lot of old information on Webull that I still use, and a lot of the new stuff I'm doing is on TradingView now. Looking into the liquidity zones, we know where they're at, and we can see that our current daily candle is spiking a big old wick right in the top of that zone, and it went exactly to the top of that zone. Well, let's go back to a 5-minute chart and see if there was a trade there. Oh, heck yes, there was, and I scalped it. So looking at the Bollinger Bands, I quickly realized, yes, there's a short entry signal here. That's kind of evident, and TradingView does this. It'll post these. Sometimes they're great signals, sometimes they're not. I tend to use a little bit different method to identify when I'm going to go short, and I actually waited till I got here. So effectively, once I knew price was going to breach the top of that liquidity zone, I was fairly certain it was going to follow through at least to the bottom, and I was able to set up a 0-day debit spread right at the level there. 429, 428 was my spread, dollar wide. Literally paid on this spike here, opened that position up for 4 cents a spread. Kid you not. Sold them to close for 18 cents a spread down here. That's a victory. Put some size on that. Really quick option spreads in 0-day trading. It's not very common. There's not a lot of people who will do that. Most people will rather sell credit spreads on a day like this. I'm a little bit the opposite. I like to minimize my risk and absolutely take on the highest possible risk to reward ratio without being so far out of the money that it's never going to do anything. And finding that sweet spot is often tricky, but when you get it right and you get the move right, it is magical. So getting through that liquidity zone was pretty easy. I was able to take my position off right on the end of that wick on a 5-minute chart. 1-minute chart, it gave me a really clean signal. It's right here, that little spinner. Done deal. I'm out. And it was slightly under that liquidity zone to boot. So I knew it was likely to come back in and test. Now we've got this double bottom, and we can reverse. We can come back in this liquidity zone. We might even get a bull trade into the other half of the day back up to the top of this sucker at about 431.40 for a target. Identifying that zone and knowing when to take a trade is key. So if you're going to scalp anything that's volatile, that's a really quick, dirty, and cheap, cost-effective, very low risk. I used the word cheap. That was a bad word. Never say cheap. The market's not cheap. But anyway, it was a very cost-effective way to take advantage of the move without having a lot of risk on the table. And I even left a little bit of money on the table. It extended a little bit beyond my target. Here, I could have taken a bigger profit on that, but implied volatility fade was going to crush that anyway. So heck with it. Did what I needed to do, took a large percentage return on a sizable trade. I'm done for the day in one trade. Can't even complain about that. Also looking at my Tesla trade this morning, that was pretty spot on. I was really easy with that one. Let me look left on Tesla and I'll show you what I mean with that one. Tesla I have on a fib fan here, and you can see it's right in a fib zone. Very clean price action. I was expecting that move. I had my butterfly still going into this. I want to talk about that strategy a little bit. So I've been holding on to a debit spread that I opened about 6 weeks ago on Tesla here. And with that, it was really far out of the money. So how do I expect this move? Well, let me go and switch over to my Webull chart, and I'll show you something real quick here. I have this old memory here, so I want to keep this drawing alive on this chart. Oops, there's an L in there somewhere. All right, let me go out to a daily chart and zoom way out on Tesla. 1-for-1 measured move, easy peasy, lemon squeezy. I got long in this area here and took this debit spread and rode it right on through. But I've been flipping it. So in these pullbacks, and this is where the strategy really starts to shine. In the pullback, if you have an opportunity to sell a credit spread against a debit spread that shares the same short leg, you can lock in a profit on your debit spread. So you have a can't lose position, meaning you've locked in a profit by closing both ends of that trade. So if it goes sideways or falls off a cliff, you're guaranteed the money you trapped in that trade, so to speak. If it runs you over, you're still going to get that. So it indeed ran me over this morning. My short legs were the 245 strike, and looking at it last night, I was a bit nervous about early assignment, which wouldn't have hurt me. I'm still going to be able to exercise my position on the long legs and cover any potential loss in that. And I've still already captured profit on this, but I've been able to flip this thing 5 times going through this choppy trend here. I was able to chop it in and out and just pocket over and over again, more than 100% of my risk each time. In fact, on this guy here, I was able to capture a 300% return flipping that in one day. I day traded that one. So by that time, I was actually rotating back into a credit spread by the 17th, and I kind of got myself a little bit stuck until it pulled back here, and I was able to buy it back one more time. That was the 5th time. At that point, time decay paid me almost 100%. It was like 90%. I'm like, okay with that. That was the 5th time, the final time rotating. Stuck the credit spread together again on this guy here. I was able to lock in 400% on that, but overall the trade still netted about 2,400% at that point. And riding it to the point where price ran me over, once it went beyond that, some of that 2,400% evaporated. I was still able to close that thing for a sizable percentage. I was able to close it at a 1,300% return, in fact, overall. Not too shabby, though, considering my long contract spread being that I bought it back here and it was at a 240, 245 long debit spread. The risk on that was just 6 cents initially per spread. That's a $5 wide spread with a 6-cent risk that ended up in the money. Imagine if I would have just left that alone. That would be an astronomical return on a very, very minimal risk. But I'm okay with that because when you're trading that far out of the money, this volatility can really shake you up. And if you're not fully 100% confident that this trend is going to resume a full 1-for-1 measured move like it did, you're going to be looking at percentage of profit returns on those and going, well, why wouldn't I take this? This is well over 100% return. Yeah, absolutely. Be nimble. You can go and do the other thing where you take some size on it, close half the position to profit, leave the other half alone and let it ride. Cool, you can do that too. And certainly I did that before from the Q4 earnings report scenario where I did very well with that. In this case, I wasn't fully confident that it was going to complete a 1-for-1. I knew it was going to go to at least a 1/2-for-1 or up to about 220 or so. I was very confident in that part of the move. I wasn't sure it was going to shoot up like this, and certainly that sudden oncoming news definitely blindsided the whole situation, but I'm okay. I did very well with that. I can move on to the next thing. I also, in this pullback, was able to set up a July 21st expiration, full on butterfly, with the 300 strike being the middle of it. So if this thing continues to ride just another 50 bucks up, that thing will be in the money as well, and I'll profit greatly from that. Risk on that spread, 3 cents per butterfly. Yeah, I'm cool like that. So no one in their right mind would take these if they had a commission broker. That leads me to the other situation of do this with Robinhood, do this with Webull, okay. But if you had to pay commissions on there, just be mindful that when you're taking these little, very tiny risks, the round trip on your options trade for commissions is going to affect that profit margin. So be a little bit careful on that. All right, so gone over a lot of that strategy, and I think the next thing to do is to kind of flip open good old Jimbo's list of 15, 16 stocks here and start stacking on it. So I just pulled these straight off of the CNBC website for top 10 things to watch in the market today. And I like to critique them. I like to go and not necessarily rattle Jim's cage, but I like to apply price action technical analysis to all the things he talks about. Whether he's bullish or bearish, I do not care. In fact, I've even kind of stopped really caring about mainstream analyst price targets, but I still kind of mark them on the chart when I can, so just to be mindful of where they're at. Oftentimes those will represent places of volatility where you can take advantage of the implied volatility swing in that price range, so you can convert some option strategies or swap some strategies and make some really, really cool options trades out of that. So the volatility that particular price target itself causes, it definitely has an effect on the options market, and that is definitely to be taken advantage of. In fact, I would even publicly like to reach out to Mr. Matthew Tuttle at some point and say, hey, I've got an idea. Your SGIM ETF is great. It's not really going anywhere because suddenly old Jimbo is about 50-50 where it used to be 70-30 at best. So now we're kind of looking at will that prospectus be able to be amended to where instead of just being short everything Jimbo's long on, you could go and just sell options on it. I mean, it has an effect on the implied volatility, and boy, that'd be neat to just turn it into an options income generating machine. I'd love to approach the guy with that idea just to see what happens. Anyway, let's get on with it. So CVNA has been all over everybody's radar, and it's certainly at the top of Cramer's list there. So let's have a look at it. I have some old dope on this thing. I've been charting this thing for a long time, just with basic pivot lines. I treat this like any other penny stock I've ever traded. I look left, I figure out where control areas are, and I stick a line on there. I know where all those bars are, and they make sense to me, and I just trade them as they come. So pardon me. Yesterday, I did have a target right up here. It was, no, that was right up here, 2167. That pivot was known. I'll shrink this down so you can see it. Yesterday's run, blew through it, made a full move above it, but my target from the get-go was that target of 2167. Mentioned it to our members in the Bullish Bears. Some of them did very well on it. I wasn't quite fast enough with that alert to get a lot of people to be able to profit from that, but hopefully if people were already long in it, they were able to take some good profits on that move. It's an old pivot line, but look at this. This is one heck of a double bottom reversal. So can this company reverse and come around? Sure it can. Long term, maybe. That's one heck of a descending channel, descending wedge type of setup. Let's drill it down and look at the shorter candles in this. I usually will pick out if things are going to go absolutely bonkers for a company. You look at these descending trends. Okay, they like to tend to make a 50% retracement, but can we see that thing hitting 170 again? I'm not so sure about that. So I'm going to mark this as the high. Let's go with 155-ish. And then let's go figure out what half of this trend looks like. And maybe we got a chance of heading there. In the not so distant future. Pardon my voice is parched again. Let me sip some coffee. That always makes it worse. Okay. So it kind of puts us around 82, and that's a little more reasonable. But dude, we're trading at 21 bucks. Okay, so 1 to 4 ratio, cool. If this thing breaks out and gets short squeezed to all hell and everything just takes off and goes nuts, got a great chance of making that range. Let's plot that in kind of a standout color. I like to make it white typically. Now let's look at a couple other levels that are interesting here. So we have one level here about 30.20, another level up here at 38, 39 bucks, somewhere there about. And this is, I've been calling this out a little bit of make a swag implementation on your charting, meaning scientific wild guess. So I'll leave the A part out because I'm not sure if I'm allowed to say that out here. But anyway, swag it, because you don't need to be dead on with your price targets. You just need to be pretty close. So let's look in a little bit on this. That is a much more reasonable set of pivot points that are known control areas, and then we can go and drill down to the short term. Well, this was easy. Support was resistance. We came into the day before yesterday, a very nice wedge, and man, that thing took off. So if you missed the boat on this, my plan was to catch this measured move, and I certainly did very well with it, and then some. So effectively, you got a 2-for-1 measured move. You can kind of see it plain as day. I don't need to draw it for you. You can pretty much get used to my drawings. They take too much time. Knowing where that target was up here, pretty easy for the extension, but I would rather take profit on a 1-for-1 because I know I have confidence in a 1-for-1, and that was pretty easy. 21.67 is where I took my profit. I don't care if I left money on the table. I did great, but check it out. We're back below that today. So bag holders would have kept holding that, and here they are getting a little bit bent because they're underwater now. So knowing where these control areas are is very important, and knowing when to take your profit when everyone else is greedy as all get at. And this is one heck of a move here. This is no small move in the market. Take profit. I'm wearing the shirt today, and it reminds me every time I think about it. Just scalp it. You don't need to sit here and be greedy. You don't need to be holding bags later. Take your profit. Very easy done. Where's it going to go next? Well, this also happens to be near a 50% retracement level, so we could probably range in here for a little while. If it can hold $21 for support regularly through the whole day, maybe it's got a good chance of coming back up and hitting 23 again, give or take. I'm going to keep an eye on it, but I'm certainly not going to be holding my breath waiting for a setup on this thing. I'll wait for another setup later, but since it's been on the radar, it got talked about, it got spiked. Again, if SGM was in on this, they would have done very well to sell options on this thing rather than to try and short it. But if they short it anyway, sure, they can get a chunk of that on the way back down. Maybe it'll break down to 1770. But for me, the smarter idea, if I'm going to short anything, I'm going to do it with very limited risk. And if I'm long a position on this, I'm just going to sell the options. I'll hold the position and generate income on it, because if you know me by now, I love using that wheel trade strategy to eventually generate a zero cost or negative cost position on pretty much everything I trade. So if I'm holding a wheel trade, that's my intention. I'm going to look for generating income on that strategy or generating income on that equity and getting on with my life. I got plenty of other things to go look at. Okay, I'll try and get down this list. It's a big one. We're already about 20 minutes after the hour here, so let's see if we can crack down on a few of these. Affirm. This one, I know people who have been holding bags on this thing forever. Let me start with a weekly chart. I've erased my dope on this because I no longer care about it, but I know people who've bought at $1.50 a share. Ouch. Man, those people are very upset. I taught some of those people, fortunately, how to generate income while this thing crawls along the bottom sideways by selling options against their position. Unfortunately, they have to be far enough out of the money where their yields like maybe around 2 to 3% a month, which still isn't bad, but it's going to take a long time to generate $150 a share. That's just a given. In the meantime, I mean, they can still generate income while it eventually bounces back. But we have just a simple set. known levels, look left, pretty easy targets. Look, we're there. So next move, maybe it'll consolidate another wave. If it breaks out of this, well, where's our next target? All right, we got one here, 2150. We got one here, 27. And gosh, if it gets wild and squeezed, can we see 3880? Yeah, maybe. Let's drill down into a shorter term frame now. We've been there before, okay? We hit 2275. That top of that candle kind of hits that 2156 area. Pretty well known. And you can look left here. We kind of got pretty close with our swag here, throwing it on the weekly chart. Knowing these zones, you kind of have a nice looking double bottom here, but as with any double bottom on any time frame, I always call this R1 or first resistance. So your first high is always going to be your first resistance level. That's your pivot. Fine tune it to the body, whatever you want to do, that's fine. 21 would be a good target. If it can break out of that, it'll confirm this as a reversal on the long term, and we can get a swing trade above from 21 to 27. That's a more effective trade than trying to chase this rally into resistance. So if you haven't gotten in this already and you didn't get a bargain basement deal on it, that's where you're going to go. But for those of you who paid $150 a share on it, you're still able to take this volatility and go and sell at these levels. So you can go and sell options around 21 in a big spike like this on a nice volatile day like yesterday. And by today, you could have bought to close those positions for probably more than half what you sold them for, or a little less than half what you sold them for today, depending on what expiration. Probably look at weeklies or bi-weeklies. That is a great income opportunity right there. Whenever you see these spikes, sell some options, guys. You know, if you're going to be holding bags on this thing, if you're going to be investing in this thing, learn that strategy. It will do you very, very well, especially on volatile stuff like this. Natural yield on this thing, I haven't looked at it in a long time, but even while it was going sideways in this range back here, oh, there's some old dope here. I caught a nice measured move of that later or earlier. Anyway, what I'm saying is, in this particular equity, when I looked at it last when I was trading this move, I was looking at about an average of a 6% monthly natural yield. And when I say natural yield, it's if you sold a monthly expiration 2 or 3 strikes out of the money or whatever, if price continued to stay within that bound, your natural yield from selling both puts and the calls would be, you know, at 6%. So your risk in if you bought that position long at that price and sold the put and call a month out, your yield return on your risk involved in the trade would be about 6%. Now, in a month, that's pretty good. Put that into perspective of a lot of buy and holds are happy to get, you know, between 6 and 10% a year on their buy and hold positions, just holding the equity. So if you can generate income selling options, why the heck not? And that yield is pretty dang nice. And selling a monthly, you probably would have got pretty close to being exercised on this spike here if you sold a month out. It'd be okay to be able to, you know, take these pullbacks and buy them back. You can always work the trade and you can always move those options out as time goes on. That's where I actively trade the wheel trade. So I'll go and plot these monthlies or bi-weeklies for what their yield is naturally, and then when I see the price action and I'm pretty confident in knowing where it's going to go, I'll adjust that position. I'll buy to close a put or buy to close the call, wait for the price to return to a better premium point, sell it again. I capture profit on those over and over and over again. The wheel trade doesn't stop there. You can swap it into pretty much every other strategy you use. Just remember that you're also long 100 shares per contract. So you can convert those short legs into condors, and instead of closing the short legs, if price moves away from them, you could then go and buy the next leg out, the next strike out on the put side. Say the price goes up, you can go and buy the next strike out, so you can secure that short put with a long put. And essentially, if you buy the short put or the long put for about half or less than you sold the short put for, you kind of lock in profit in a way on that, and then it puts you in a position where you might not be assigned on that. Or if you are, you've got something you can wash it with, or you can just take assignment, leave the long put on depending on how long it has to expiration. There's many ways to adapt that trade is what I'm getting at. So, effectively, Jesse, I'm not sure if you can hear me. Maybe try looking at the Twitch channel. I'll see if I can send a link in the chat here. Sorry. I've been talking to myself for a minute here. Sorry. I've been talking to myself for a minute here. Now I got feedback. Now I got feedback. All right, so I'll just message you real quick. It might be broken. Click on the Twitch link. Okay, let's continue. Let's look at DocuSign. That's another one that's kind of hot on everybody's radar. Wow, that's a disappointment. So everybody got into chasing it, pulled back. I haven't looked at this thing in a long time. Again, same scenario. I can go and draw on this for you, but you kind of already know what I'm going to say. That is pretty much the end of a short squeeze, it looks like here. So I think that'll probably pull back to about 50% of that. Around 52 bucks, maybe $53 would be a good target for bears on that one, short term. If you're looking to get long on this, maybe consider it around there. But this is looking like that was just one heck of a squeeze. I'm sure this was probably a news pop or something. I didn't even pay attention to what was posted on the website about it. I just look at the ticker and write it down. Price analysis tells me what to do. So I'm looking at pretty much the general setup for a quick squeeze, and that's about it. Selling options on here, that would have been awesome. But other than that, I'm not really interested in DocuSign at the moment until it gets down to a support level. Maybe I'll start looking to possibly throw a wheel at it or something around there. I'll have to look into the yield on that too. Let's kind of go over that one. Tesla, man, as you know, I've already kind of talked about Tesla, but that has been just gold. Easy setup, and I swear I'm the only one who's bullish when everyone else is bearish when it comes to analysts, and this has been awesome. Q4 earnings run up, I was all over that. I was talking about it. I started to tweet about it on both the Bullish Bears channel and my personal channel, and it's been glorious. Took that trade to the moon and back and loved every minute of it. Did it again. Nice bullish 1-for-1 measured move. At first, I saw this as a 2-for-1 into this consolidation, and it kind of failed the 2-for-1, and I looked further left and decided, oh, that's one leg. So when you draw these, you literally just start at the base, come up to about the mean of consolidation, which is right in the middle of this mess, and then draw a box. Take an equal box, draw it over your first box, drag it up on top of the mean, and there you go. You have the makings of a quick way to identify a measured move. I also have further targets on this thing. So looking left at the daily chart, I mean, that thing hit 414 before. It's been there. About half of that move from base to retracement of this entire channel here falls right around 290 to 300 and kind of in this consolidation here. So if this continues on or gives us a consolidation in this area to where it can get into a 2-for-1 measured move, that puts it well beyond our 50% retracement of the overall trend on the long term. Don't know that I would shoot that high in the long term just yet, but I'm liking the trade opportunities that Tesla provides. You might have saw my comment this morning. I said, boy, SPY and Uncle Elon have been paying my bills. This is exactly why. Spotting stuff like this has just become easy for me. So definitely an awesome bull trade, but again, this is a very fast news pop, so be very cautious of where it goes next. Would I buy it here? Heck no. I'm going to wait for this pullback and see where I'm at. Then again, I told you about this where I went ahead and while I had my June 16th expiration debit spreads that I've been working in and out of butterflies on here, I went ahead and rolled out a new position into a butterfly with 300 at the center with July 21st expiration in this pullback here. So I'm fine with whatever it does, but in the short term, I almost certainly expect it to kind of trade in this range for a little while until we can get out of it and get some excitement into the old Tesla again. Thank you, Uncle Elon. I'm loving that. Next, we want to look at GM because that was kind of the news pop here. So let's have a look at GM. I got plenty of old dope on this guy. At first, I was thinking maybe this would be a good bearish measured move, 1 for 1. I've got all kinds of lines on here. This was just a diamond pattern I identified in here. This is the analyst target, and this is where one of those became interesting, $38 a share. That was spoken about probably about a month and a half ago when I first started critiquing CNBC's top 10 list with Jim Cramer there. So looking at this move, it's pretty powerful. This is a very nice looking bear flag, and it may just break over and finish a 1 for 1, but until it breaks the support, I can sit on my hands or do other things and wait for my move. I'm very patient that way. The other scenario is if this ends up being a retracement, I know where the targets are, and all you gotta do is look left, figure out where all of these high points are. You can certainly take a trade on that, but know that today's move was merely a retracement of the previous trend, and that's this guy here. And that kind of sheeted right with my diamond. Well, it also happened to be about where the analyst target was, so I just sort of drew it there. That's about half of this entire move, right to the point. 50% retracements are a very reliable trade setup, and they're almost easy to spot when you spot any kind of channel like that. They're very typical. Did the same thing with Amazon and many other equities along the way. They're very common, very easy to spot, and typically very smooth to swing trade. Knowing that analyst target was $38 before, it may have changed now. Who knows? They might even have given it an upgrade or downgrade. I don't really care at this point. All I know is price action tells me what to do. So kind of keep on tune with what GM does next. And I think if we get a snappy pullback on this, we could probably shoot back down here to about the 34.23 target. So bears might be getting on board for that. Certainly be ready for a quick maybe a quick put spread trade in the near future on that one. I might even jump on that today. I'll take a look. Certainly I'll post a comment, and I always try to share some of my fun, very low risk trades, and GM's great at that. As soon as the implied volatility settles down from this move, I'm sure I can find a debit spread probably in the middle of the day-ish that I can go and bearish on this thing for a retracement target. If I'm wrong, that's what the minimum risk is for. It's very little. It's not a lot of money. All right, moving on. Ford. Trading that thing for eons. And pretty easy. So way back here, I found, this is when I first started drawing those fan lines, and I'll be talking about that on some of my up and coming how-to videos on how to trade a quick fib fan. I can also go and trade just a manual fan. You can draw them anywhere. So effectively, you just identify one common trend line, and then you can add a second common trend line, and where the divergence is, just split it. And that happened to be this guy here. So I looked at this on a weekly chart. This big wedge was pretty damn obvious. Split it here, throw a regression line in the middle, and it gives you some pretty easy 1-for-1 measured move setups. In fact, we had a nice 1-for-1 bear move. Consolidated down here in a nice double bottom. You can kind of split these and subdivide them in any way you want, but they work on every time frame. I'll draw a couple while I'm here, why not? So here you have a division, and usually about half the expected move is pretty much on par with spotting these measured moves. And here from the regression line up, there was a nice 1-for-1. Whoops, let's extend that. There we go, about half of the range. And we just about hit the peak target here today. So this is where we're looking for bears to start selling this. You can look into history. It's been there before where it spikes up, it gets a quick pullback. Ford's been an easy options trading machine, and I often use it to train options trading strategies for a lot of beginning traders, and it's been pretty easy to find the price action on it. But the one thing I stress most new traders to do is learn the price action first, then start trading the options, or start experimenting with the options, try it out. Ford's great because it's very low cost options. Usually you can trade at or strike out for just pennies on the dollar. They don't have massive swings in them, and the time decay on them is like very minimal. So you can trade a couple weeks out and do very well just running strangles on Ford. And that's kind of the strategy I start with, and then turn strangles into condors. You can turn them into for credit condors built on debit spreads. Pretty cool stuff. You can learn a lot about options trading by trading Ford options. The yield isn't going to be great. Your risk to reward ratio isn't going to be huge, but it's great practice for being a very mellow mover with decent options liquidity. So a nice tight bid-ask spread, great for learning on. Again, looking at this price action, I can split yet another division in our fan lines here, and there you go. Target met pretty easily. So look for a pullback on that. We could see it come down and test the 1330 level one more time. It's kind of spiked up there. It can also finish this move up here. So a couple days from now, we'll see Ford do some fun stuff. But that EV news with them, and then with GM and you know, tying into Tesla's charging stations, that means a lot. It's going to do some price action, but in the short term, always realize that most of this is parabolic, and it usually happens when people chase. So always be alert and don't be as greedy as these guys. Scalp it. Take your profit and wait for the next setup. It will come. Moving on. Let me go into the next one here. We're looking at Pan West. I'll brief that one, but I do not like trading that one. I just don't like it. So 1-for-1 measured moves, pretty easy to spot on that. All right. It was pretty easy to pick off a couple pivots here and there, but realistically, I love trading chop, but this thing just doesn't give me a lot of opportunity to really have some high probability trades in it, other than, yeah, it makes pretty fair measured moves, but it's also just, it's so choppy. It's like kind of hard to trade. And also I don't like the bid ask on the options chain for this one very much. So it's not one I take a lot of interest in. But just a short view, I would almost certainly expect this to pull back a little bit, maybe hit about 217 and see where it ends up breaking out of or breaking down from this wedge that's forming right here on a daily. 2-hour chart's going to kind of show you the same thing. You got a little wedge here. These pennants tend to break one way or another. All ranges tend to break, and whether they go up or down on the end, kind of a 60-40 rule, you know, 60% chance of follow through on a bull pennant, typically 40% chance of a failure rate on a bull pennant as well. So I'm going to wait very patiently, if I'm going to trade this, for this to shake out and figure out which way it's going to break. It will eventually break. Moving on, we got TNB. I don't even know who that. Oh, Tenable Holdings. And more choppy stuff. I just don't particularly care for that setup. My gosh, what a gap down. Okay, if you would have caught the bounce on that, sure, 50% retracement, done, right? Even in a gap, you can spot that like nothing else. Easy, right? Would I trade it? I'm just not interested. It just doesn't have what I like in a trade. But if you are trading it, let's have an analyst look at it. Here's your trend. There's your 50% retracement of the bull trend of that. That was the 50% retracement of the gap fill. I would pretty much be done with it till the next setup occurred to me at this point, just personally, if I was trading it, but I'm not. Just not interesting enough to me. I get like that sometimes. I get really short with stuff. If it doesn't interest me, if I'm flipping through charts and I'm just looking at these at a glance half the time anyway, if I don't see something I like, I got plenty of other things to look at. There's plenty of stocks out there to trade, all right? So kind of understand that things, some things interest me, some things don't, and I know that a lot of retail's probably been involved in this, and anytime an analyst chips their teeth about it, of course it's going to move, but in the meantime, I don't have to care. Let's just say that. One that I do kind of look at, I haven't really taken very much opportunity to trade this, but OKTA has been kind of an interesting stock lately, and I'm going to show you why. Well, let's just look at this. So we've got pretty much our descending channel. Yes, it's choppy. Yes, it maintained a smooth trend under that 8 period, consolidated here into a bear flag, broke more or less a continuation of that move. Now we've settled at a bottom around here, 44 bucks. Kind of creep back up, retraced about half that bar there, maybe went a little bit beyond. Kind of playing around in some chop here is not always a good idea, but when you can identify zones on a weekly chart, sometimes you can scalp it, and this one's just cheap enough to do so. You can see I've got the 50% line plotted pretty well in here. It defines the range. Now we're back to the bottom of the range. Can this break over as yet another bear flag on the weekly? It can. So would I be interested in trading that? Not particularly, unless I can find a reasonable way to look at whatever this breaks. If it breaks down, starts heading for that 44 from 70, yeah, we can scalp that to the downside with a couple of put options, sure. Looking at a bounce anytime soon here, I'm gonna rather wait for anything to tell me something. I'm not gonna sit there and chase that. So, not the most interesting stock I've looked at, just to say that. Microsoft, however, always awesome. Love Microsoft. That move was pretty much easy to pick up. All right, where's that previous high range? Easy bar right here. You can see it plain as day. Riding this trend, you got 1, 2, and a rare 3-for-1 measured move laid out in that. But let's look further back and why I have these two lines here. A long time ago, probably about 6 weeks or so ago, I looked at this and realized, hey, that's one big cup and handle. And hey, it tapped off the 200 weekly moving average. I know a lot of people invest in Microsoft. I'm not going to lie. I'm one of them, and all 4 of my kids invest in Microsoft. So knowing where that cup and handle is, you know where the 2 control bars are, or the control bar range in that peak of the previous high. I like to call these out. They're pretty easy to see. You got 2 rim lines in pretty much every cup and handle you've ever seen, and look, it did both of them beautifully. Now I'd expect to see, this is the cup part. The handle part usually pulls back and finds support. So we can draw a couple lines on that, find the control area. 307.65-ish would be a great pullback. I would love to see, but look at this. We got a 3-bar setup, and today closes the week. That sometimes will give you a quick squirt right back up to resistance of the last bar in that setup. I call these out all the time on day trading, and they play out on every time frame. So let's look a little closer at that. It's a pennant. All right, can it retrace? Sure. This is where your target would be, just under the top of this bar. And look at today. This is today's candle. It's done that already. It's just about wicked it. Bounced off, and a lot of bears came into play and started cooking it off. So let's go a little bit tighter here. Well, this is your gap bar here. This is your resistance level, and that's a known bull target. It failed to break out. Well, can we close the day up here? It's possible. Let's look a little tighter here. Aha. Well, we've got a nice descending channel here. We can say, all right, well, if it doesn't get there, cool, because we can trade a retracement. So looking here, let's put a segment line in place right around here for a very quick retracement target. And we'll see if I'm right later, I'm sure. That kind of looks like a little rounding bottom reversal to me on a 15-minute chart, and it can certainly be a common retracement of half the trend. And this is, you got 2 big bull bars here for range. That's the top of the range for the bar here. This is the expected move down from the top for half of that channel. Let's look a little tighter. We've got a nice little IHS, or inverse head and shoulders, forming here. Pretty simple. The trade setup is as follows. There's your resistance point on the reversal pattern. If it can't break that, it usually will fail, and this will turn into a bear flag and make a bearish 1-for-1 measured move. Typical. If it breaks this resistance and starts to build momentum in a trend here, your trade is from about 226.70 to about 227.35. So you could very well see that happen today. Certainly if it doesn't go, you don't have to take the trade. But if the setup looks good and it verifies, hey, it's going to follow through with this little reversal, there's your control bar, there's your reasonable target, and an extension target is just as easy to find. If it gets to be bullish beyond that first target, well, there's your extension. You can certainly take advantage of that. So if this then that plays out pretty easy on Microsoft. I love trading this thing. It's just easy. So there's your first target. If you're going to get long here, keep your stop tight. Know that this can easily flip into bear flag mode at any given moment. If the market starts to take profit, you know, the greed index was pretty high here. A lot of people already did. Note that typically you'll get that bounce, and heck, it's starting to stack up that right now. So watch this level. First target 326.70, second target 327.40, 35-ish, and third target would be up here 327.68, 327.70. Reasonable. Swag it. It's close enough. We could see that thing follow through even while I'm talking before I even finish this, and I got about 10 minutes left. Let's hurry up. Love Microsoft though, great trader. Activision, not so much. I don't like to trade Activision, but I'll take a look at it. Yeah, I've had some levels marked out on it. It's done its thing. It's just never been a very interesting stock for me to trade. Those doji parties just drag on forever, and what those do is they absolutely destroy premium on options positions. So not a favorite stock for me to trade. This would be, if you've got a large position in this, you can certainly generate income on implied volatility that it does provide. But as far as trading options on it as a you know, speculative trader, it's just not one that interests me. However, let's look a little left on it and realize that we've gone up the rank, we've retraced half of it, we've come back and settled in the middle. That's going to take a while to shake out into the next trend. So I don't see a setup here other than what's already been done, and I'd love to see it just kind of range here for a while. Maybe you can get some range trades on it between 78 and 81, 81.50. Maybe, but it's not a stock that interests me that much to trade. Adobe. Yeah, that's a nice little reversal, but it's kind of pretty much approached its target already. So anytime I see these channels, man, they're awesome. 50% retracement, done and done. Let's look further left and see what we can see. So likely we get control areas involved here, and we can see there's a pretty clean gap here on the weekly chart. So let's draw this control bar in play here and see if it lines up. Oh, look, it does. So we could certainly see a range trade on this happen, and if it gets bullish beyond this 50% retracement, it can finish a move to the next control area. We could see 517. Don't know that I would trust it much higher than that until it consolidates for a while, but let's drill down. So we've got a nice clean, heck, that's a rare 3-for-1 right there. We're almost certain this is going to pull back to support. So look for support on this thing around 427, 428 in my opinion. We might see a consolidation in the upper half of that, so definitely look for a better setup than what we got. But look, it's already done pretty much everything it's going to do in this range for a little while, so let's wait and see what happens. Short term, there's a 2-hour chart. You could see, you know, there's a quick retracement target right here. Pretty simple, 50%er. There's your channel trade, 1-for-1's done. Broke up to with a wick. People are taking profit on this now. I'd love to see this pull back and give us an opportunity, but in the meantime, the bears kind of have it. You might be able to scalp some put options on that, but man, that's going to be one expensive trade. So not my most interesting trade idea out there, because the options chain just doesn't excite me for the risk to reward on this, but there's certainly some moves to be made here. So I could see that you could definitely trade it. Just I'm not very interested in it. Let's see here, MTB. I'll try and get through the whole list before we end here, and we've got about about 8 minutes or so. I know 1 o'clock someone else comes on, so I don't want to tie up the space. Well, one measured move done. It's got a chance at hitting half this trend, but it's kind of looking for a pullback first. Let's throw a pivot line right in the middle of this minutia here. I'll even give it the benefit of the doubt and split the control bar. Give a quick draw on this. So maybe we get out of this channel and certainly know where the angular resistance is. It's right here. Pretty simple to see. Most of the time when I spot these descending channels, in fact all the time, I highly recommend adding a regression line or know where the middle of that channel is, because that's going to be your action or no action signal zone. And there you go. That's plain to see. 50% retracement target, pretty dead on if it gets out of this channel. So watch this for a few days, maybe into next week. We might have a setup where it pushes that resistance. We could see a 2-for-1 come out of this, so I'll draw you some boxes. This might be interesting next week. In fact, I'm going to start with the 1-for-1. I'll draw this as quickly as I can because I know we're short on time here. And then we'll just draw a 2-for-1. So simple, showing you how to draw these things and how to line them out. Take one above the median. The extension goes right to that 50% retracement target. How about that? So if this, then that. Let some consolidation happen here. Maybe it'll finish our 1-for-1. First target would be like 132.80. Second target, of course, 144 if it breaks this channel. So keep an eye on this one. This one could be interesting. I might mark this in my watch list. It's also a dividend paying stock. Pretty decent dividend, in fact, and I'm sure it's got options. I'll have to look into it, but if it's got options and dividends, it's a wheel trade target, baby. You can generate income on these, and if this is a nice smooth trend and this is a good swing trade setup, you know, add it up. Watch this angular resistance here. It could give you a good month-long swing trade on this thing and actually produce some decent options income. I'll have to look into that a little better. I'm going to mark this one definitely and look into it. If for nothing else, a swing trade, but in the long term, it could even be a good wheel trade candidate. So, yeah, I like it. Cool. Next, looking at Target. Good Lord, that's a whole lot of red on my chart here. So, I talked about this last week. This is a nice bearish 1-for-1. GM, same setup, little less chop. Definitely keep that in mind, that if GM breaks over, it's going to do this. Looking at half of the move made, I certainly talked about this last week, and here we were at the bottom of box 1 for a 1-for-1 to finish this move for the bigger time frame. And let's drill down to this real quick. We got a nice bear flag breakover. It broke support today. We could see continuation all the way to the floor on this thing. Holy smokes. Can you imagine Target back under $100? I can. I say it every time. Analyst targets up here, by the way. I love that. I just completely laughed when I saw that target and I saw this setup. I'm like, no, just no. So certainly take my analysis with a grain of salt, but I noticed, and I'm pretty sure everybody and their mother noticed, as soon as a company starts getting into politics, they don't do so hot. Just saying that. I don't care what the politics are. I don't care what side of the fence they are on. Keep their nose out of those books and they won't have these problems. So effectively, we've got a nice 1-for-1 on. Watch this support level very closely. If it breaks 128 today, we could certainly see it slide right into that 1-for-1 and even hit down below $100. Cool, man. I might take some bear trades on this guy. Be aware that in this range, it can still turn into a reversal and it can still give you a 50% retracement of the previous trend. So always keep that in mind. Keep your stops tight if you're going to, go in and follow anybody's advice on this. I'm certainly not giving financial advice. This is just my trade idea. But I'm looking for a bear move on this thing, hands down. And if I see the right setup break, I'll trade it. I like this one. This is pretty clean. So let's keep an eye on that. That could start to formulate today or even into next week. Very good setup. I've got a couple minutes left. Let's hit a couple more Walmart, and then I'm going to get to the last one, which a few years back was actually a good wheel trader. Let's see, Walmart. Going into Walmart, it's nearly finished with this 2-for-1 bullish measured move. Analyst targets right here. It's been there twice. Third time's a charm. Let's see if it breaks it. 155 is their target. I can see there's a nice clean little reversal here on a short-term chart that's going to look a lot like a cup and handle. Shallow. But there it is. It's made its 50% retracement to this guy. It's got a healthy pullback. There's some strength left in Walmart. I can see it certainly hitting that 155 target one more time before we can decide whether or not it's going to complete this move to finish all the way up here at about 160. So definitely a strong runner, but just be cautious in this range. If it can't get through this analyst target, it'll certainly pull back there in range here for a while before it does anything. And it can even go back down and retrace into a descending channel right from here. Mark that and know where the angular is. If it breaks into a channel below that guy there, we could certainly see this turn into a descending channel. So take this with caution, but it's definitely setting up with some strength. It's outside of that channel per se, but let's see what happens next week on this. This can give us a continuation sign or a breakover and bearish move. So definitely keep an eye on that one going into next week. Last but not least, SIG. This is Signet Jewelers. This has been in the past a doll of a wheel trade when it was back in the day in 2020. I called this out to the Bullish Bears group, and a couple of the moderators actually started taking interest in learning wheel trading on this stock right around $6 a share. And it was glorious, man. They did very well with this trend. I was able to get parts of it here and there, but I was just starting to learn that strategy and had just, by the time 2021 rolled around, I was starting to write that article about the wheel trade strategy and how I modify it. Kind of look at this as one heck of a bullish trend. It's basically made its beautiful long 2-for-1. And then if you look at this as if it's a 1-for-1, it's already made its 50% retracement. So being that the analysts are chipping their teeth about it, and I guess saying that the wedding season was a little less flattering than it should be this year. This is a jewelry company after all. Look for a pullback, and when you get pullbacks, you might get opportunities to go long. You know, just like Stephen was saying about the everybody said cruise lines were going to fail a couple years back, and here they are, stronger than ever. You know what? Profit from failure, that's fine. I love doing that, but pay attention to what the big numbers tell you, and also pay attention to what the price action tells you. So look for consolidation on this, either here at $59 or down here at $51, and we could see this become a bullish trade or a bearish trade later on. We can see it retrace this entire trend. I'd hate to see that thing at $5 a share again, but damn, it can happen. Long term, it's definitely given up plenty of trade opportunities, and man, it just has great price action. So it could definitely be a good candidate for some options trading as well as some wheel trading. It is a dividend stock. It pays pretty decent dividends. Definitely watch this thing. It could give you a couple setups going into next week, and I might drill down into this on my watch list a little bit more too. So I'll wrap up with that, as it is now just turning 1 o'clock. Thanks for hanging with me so long. It's been about an hour, and I've had a great time picking through this really long list that the good old Kramer left us. So also got some strategies out there, and you know, be sure and check out some of the literature. If you go to the Bullish Bears website, you can go and search on our website now to find different articles. Just type in a topic, it'll pick them off, and if that doesn't work well for you, you can certainly find them by just putting it into the Google machine and adding Bullish Bears. So pick your subject, add Bullish Bears on option strategies. If I didn't write about it, someone else did, and it's in there. Trust me, there's a lot to be learned from a lot of the literature in the blog space on Bullish Bears. Thanks for joining me, everybody. Have a wonderful weekend, and you know, keep your stops tight and be nimble, because this market's going to be volatile, and we love volatility. Well, us traders do anyway. So enjoy it while you can, because I think we're going to kind of maybe flatten out a little bit next month. Just kind of seeing that in the cards. Thanks again, guys. Have a great one.